Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another YouTube video. This is going to be your daily cryptocurrency market update. For those of you that are new around here, every single day at 1 p.m. we release a video where we don't just cover the cryptocurrency market, but markets at large, and try and work out where our small but very significant market, and to become a lot more significant market, is going. So that's exactly what we're going to be doing in this video. You will know that we've got a plan for Bitcoin. We have technical targets at 35k, which is essentially the direction we think Bitcoin is moving in. And actually what I want to do in this video is talk about a few things. I don't just want to look at Bitcoin. I want to look at altcoins, because altcoins, I think they're in this kind of 5-wave impulse. Bitcoin's obviously leading that charge and has taken out its 1 wave. They're all doing a similar thing, and that's common to what something does just before it breaks out. I ultimately think that this downtrend that we've been in, that's been caused by the Fed fund rate, which of course has been driven by inflation, has now came to an end. Now, technically, we had signs of this with our divergence. We now have a technical pattern, which is a head and shoulders, which is typically a trend reversal signal that kind of goes with the precursor, which was the RSI divergence on the weekly. Technically, we have reasons to suggest this. We're now putting in a higher high and a higher low from the trend that we've been in. All a downtrend and uptrend, and all a bear market and a bull market is bull market, higher highs and higher lows, bear market, lower lows and lower highs. This is the first time we've had something spit in the face of this downtrend, and ultimately we think that this is going to lead to continuation. And the interesting thing is, technically we got onto this, and fundamentally, we were kind of in this grey area where we were looking at the 2-year yield and saying, okay, it looks like it's going to top, and that means that the kind of narrative's going to come to an end, and markets are going to front-run rate cuts as they front-run rate hikes. But this was all before we had Silicon Valley Bank, which has swayed the macro landscape massively, because up until this point, rates have really been driven by inflation. I think inflation, by the way, is going to come down in March, and that's probably going to fuel this rally. Obviously, we're going to get that in April. But ultimately, what's now driving things really is this hashtag banking crisis. And I want to really move on to that and talk a little bit about it. I'm going to play a very short clip, very, very short, from What Bitcoin Did podcast. I'll leave a link to this podcast in the description. Please go and watch the full thing. It's got Lynn Alden in it, and she talks about how actually most banks are susceptible to bank runs. And this is, we looked at this in yesterday's video, all at a time where bank runs are being highlighted. And I think Balaji is largely right in what he's saying. Have I got Balaji's tweet here? However, I think he's early. The banking system is exceptionally fragile. It's a fractional reserve system where reserves, literally, they're lending out 1 to 10 in regards to the reserves that they have. And actually, Lynn Alden, and this is why I want to play this clip, talks about actually how most banks are susceptible to what happened with, or not necessarily what happened with Silicon Valley Bank, but bank runs. And this is just the fragility of the system that we're in. One reason Bitcoin's done as well as it has, of course, was because it was made for this exact scenario. And ultimately, yesterday we did quite a passionate video where I came out and said, look, you need to get outside of the system somehow. It doesn't even have to be crypto. It can be gold if you want it to be. I choose to invest in crypto, but I'm not adverse to investing in precious metals. And we've seen gold do very well. I do want to touch on gold. And if you're not already following me on Twitter, guys, head over to @RealAllInCrypto. And you'll see my sort of daily thoughts. This is the gold chart in the candlesticks, and you can see how it looked very similar to Bitcoin, which is overlaid, and Bitcoin is largely, I think gold's leading the way for Bitcoin, and ultimately you're going to get similar price action. So we'll get into the technicals. You already know the kind of technicals for Bitcoin, but I want to spend a bit of time on altcoins. Jamie Dimon says the banking crisis is not over and will cause repercussions for years to come. Jamie Dimon, longtime JP Morgan Chase CEO, said the latest financial shock in his annual letter. The current crisis is not yet over, and even when it's behind us, there will be repercussions from it for years to come. But importantly, recent events are nothing like what occurred during the 2008 financial crisis, he added in his letter released Tuesday. The recent banking issue in the US began with the collapse of Silicon Valley Bank, which was closed by regulators on March the 10th as depositors pulled tens of billions of dollars from the bank. So we've seen a record number of withdrawals from banks, small banks specifically, as you've got Yellen essentially saying, look, we'll back the bigger banks, the ones that are too big to fail, but the small ones, why would you hold your money in a small bank at that point? But ultimately, this is a problem that I don't think is going away. And actually, just listen to this little clip of Lynn Alden talking about this.
$1 billion bank run in a day. They said, well, that's probably like a Six Sigma event. We can't plan for that. Almost any bank in the world, if they have a multi-billion-dollar outflow quickly, they're going to face problems. And so I think that they were greedy with duration.
That's all I wanted to play. What she said there was pretty much any bank, if they had multi-billion-dollar outflows, would be in a similar situation. This is the fragility of the fractional reserved system that we have. And ultimately, this is fueling Bitcoin. It's fueling gold. We saw record numbers of central banks buying gold in 2022. And actually, Bitcoin's price action looked very, very similar. This is what gold's doing. And let's just overlay Bitcoin on top of this. Gold's leading the way for Bitcoin. Bitcoin's going to have this pop out. Ultimately, this ties in with broadly what we're saying is going to occur for Bitcoin, which is that you're going to see this continuation. 1 hour time frame is not really any good. You're going to get 35k is getting hit, in my opinion. Altcoins are all at this kind of key level. You guys know that we think altcoins are on this kind of journey, if you will. But altcoins are at this kind of key level. This was the FTX spill. They're all consolidating around this level of resistance here. You can see resistance that they're all consolidating of, and they're yet to break out from this. Bitcoin has already done that. You can see it's got its resistance here. It's broken out from. Your altcoins are waiting to do that, and they're gonna. And ultimately, if you guys want to, we took, by the way, our first swing trade of the year within the Patreon. So if you guys want to get on board with that, it's not too late at all to do so. Please click the link in the description. I think it's well worth the money you paid for it, for the Patreon anyway. But ultimately, from a spot point of view, we are long at this point and looking to take swing trades. And again, that swing trade is still very much just at the start. But altcoins are at this kind of very interesting level, this kind of resistance where they're looking to break out from. And I think that's going to happen. I think Bitcoin's largely going to continue moving forwards, and ultimately so will the cryptocurrency market, and the banking situation is largely fueling this and ultimately fueling the Fed. If we look at the 2-year yields, this is something that allowed us to make a decision to put money back into the markets. We think this is going to continue to roll over, and this is what's going to really drive the Fed and this window of opportunity that I believe we've got until maybe the yield curve plays out. This is the 2-year yields. This is the Fed funds. What we want is this period, just taking it off log there, this period that I've highlighted, where you get this kind of sideways action for the interest rates. I don't think they're going to go much higher, although, do I have that in here? You do have some Fed members calling for higher rates, but they're just talking nonsense at this point. The Fed cannot be trusted. Nothing they say, they don't even agree with each other. And I honestly believe that what they say cannot be trusted. Talking about continuing to up rates in an environment like this, okay, so let's see how that works for you. You did a 25 basis point because you had no other choice, really. You couldn't have come out and done a 0. I think they're done, and the yield market's telling us they're done. This was very interesting. The divide between the Fed and bond trader is getting wider. Fed officials, including St. Louis Fed President Bullard yesterday, says the economy is strong and rates need to go higher. Bonds are rejecting that, with yields on a 6-month T-bill falling to the lowest level since November. So the market doesn't believe the Fed. What a surprise. And ultimately, we want rates to do this. And we think that this provides, just using the S&P as a barometer, an opportunity, for rates going sideways. Like they did here, the markets typically will rally off of that. You can see, and actually even going further back. that rates are likely to do that. So we have fundamentals married up with the technicals. The hashtag banking crisis, I think, is going to continue. I think largely they are going to pull the situation off, and ultimately it will crop up and really. And I think this is what the yield curve is essentially predicting. It will crop up and bite everybody in the ass when people just simply aren't expecting it. Have I got the yield curve here? I think so. Yeah. I think that this most inverted yield curve we've had today, or certainly in the last 40 years, is essentially hinting at the fact that we're going to have mass bank failings. And I think that's very much where we're at. This was another interesting chart. Monthly change in bank depositors. You can see just the withdrawal. 2023 banking crisis, March 2023 had the biggest monthly loss in bank depositors in US history. It's a sign of the times, ladies and gentlemen. This stuff is not to be ignored. This is why I said that the Fed basically is saying the dollar's dumb. They're admitting they can just print as much as they want. And ultimately, what credibility does that give to the banking system? Just an interesting article to love and leave you on. You guys should all now know the plan. I think altcoins are waiting to break out. I think Bitcoin's already broken out and is now going to start a 5-wave impulsive move to the upside. Our 3rd wave target we're putting at 35K. And then we'll see where the 5th wave gets us. And altcoins, I think, are lagging behind, but are going to follow and actually catch up massively. And I think altcoins outperformed Bitcoin this year. Bitcoin started, as it always does, the movement. But just an interesting article to leave you guys on. A dramatic impact. Pentagon told Bitcoin could prevent war. Now, this was after, I think, the Space Force commander said that, we need to start mining Bitcoin. There is going to be a shift. Crypto still exists in this really kind of unregulated manner. That will not persist. It can't persist. And ultimately, regulations are the very thing that catapult this industry into the tens of trillions. And we're just waiting for that. We had Citigroup last week talking about trillions of dollars being ran on the crypto space in terms of tokenized assets. Larry thinks BlackRock's very much in agreement with this. Some really interesting things going on across the board. So that's really all I've got for you in this video, guys. I'll leave a link to the What Bitcoin Did podcast in the description. I just thought I'd play a little clip from it of Lynn Alden talking about how banks are very susceptible to bank runs. And this is timed in with Jamie Dimon's comments saying the banking crisis isn't over. And actually, there's going to be repercussions for years to come. And the repercussions really are the credibility ones to the banking system, because people just simply don't trust it, and for good reason. All I've got for you in this video, guys. You enjoyed the content, like us, appreciate it as a comment, and I'll catch you in the next one. Thanks a lot for watching. See you in the next.